In today's video, I want to explain why your FERS pension is not what you actually get paid in retirement. So if you're a federal employee retiring in the next few years, this will be really important to understand, especially if you're trying to plan out in advance what your retirement income will look like. Because if you're using your gross FERS pension number, you're probably overestimating what will actually hit your bank account. So let me show you a simple example. And as I go through this, don't overthink about the numbers I'm using. I'm just trying to keep this simple to get the concept across. But I want you to picture your pension statement and then what actually lands in your checking account. So let's say your gross FERS pension is about $2,500 a month. This is the number most people focus on. They say, okay, $2,500 a month from my pension, I'll get X amount in Social Security, and I'll have my TSP. I can live on that. But most don't realize this number is just the headline. It's not the actual paycheck. So what we have to do is start taking out deductions. And first, for most married federal retirees, we have the survivor benefit, which for this example is $250. And this isn't a tax. Remember, this is a decision we make upon leaving federal service. You're choosing to give up a slice of your pension so your spouse still has income if something were to happen to you. And once you elect it, that reduction is basically permanent. Now moving on, next we have taxes. So remember, your pension is what's called ordinary income. It stacks right on top of your Social Security, it stacks on top of your TSP withdrawals, any side income, all of it is counted as income and will be taxable. Now, a lot of people assume, well, I'm retired, my taxes won't be as high compared to when I was working, right? And honestly, for many federal employees, that's just not how the math works. So don't forget to plan for taxes. Then we have health insurance. Now, in this example, we're using $570, and this is for your FEHB. And the FEHB is one of the best benefits you have as a federal employee, but it's not free. That premium comes out every single month before you ever see the money, so we must deduct that as well. And so when we add all of these numbers up, that $2,500 gross FERS pension turns into about $1,300 a month. That's actually landing in your bank account. And this is why two retirees with the same pension number can have wildly different retirements. You don't retire on gross numbers, you retire on net paychecks. If your whole plan is built around that gross number, you usually end up taking out more from your TSP, draining your investments much faster than you expected, and end up stressing about cash flow way earlier than you wanted to. Getting clear on your true net pension number is one of the first things you should do in a federal retirement plan to make sure you can actually plan your retirement income and live comfortably in retirement. So remember, you don't retire on gross income, you retire on net paychecks. So I hope that was helpful. I wanted to make this short video on gross versus net because when I'm helping folks map out their retirement income, they're still surprised about what their real number is after factoring in all the taxes and deductions. And so the sooner you can understand that and plan ahead, the better chances you have of having a successful and comfortable retirement you can enjoy. So thanks everybody for watching. If this was helpful, subscribe for more retirement videos, and I'll see you in the next video.